Hi everyone, welcome to Property Insight Straight Talk. Today, we are very honored to have our good friend, Michael Tan, founder for Freeman. And as far as I know, I think you have been heavily invested in property investment for the past 13 years, right, Michael?
Yeah, 13 years. Yep,
Yeah.
13 years.
So,
Yeah.
yes. So today, Michael will share with us what is his strategy for us to go through this challenging time. So, Michael, let's start the show. You and me know very well we are heading for recession, and how will this economic landscape change in months to come?
Well, first thing I want to thank everyone for Dato for inviting me here on this channel. I think Dato has been doing very well in terms of property as well in terms of business, and I think we all know that there's very challenging times right now. This is crazy. I've been telling a lot of people. I know we are in a MCO right now. And everyone's enjoying themselves at home. But I keep telling people that there's a big storm happening outside. And the economy landscape is definitely going to change. As a matter of fact, it's not changing within months, it's changing within weeks right now. With the extension of the MCO coming in, a lot of businesses are being impacted hugely. Actually, I just want to share this. Before we talk about the future landscape, you have to bear in mind that this is not just this 14 days alone. We've been getting a lot of stormy weathers before that already. With this COVID coming in, our tourism, our travel industry, our hospitality industry, and even our retail industry has been taking a hit for the past 2 months. Yes. So starting with January, immediately after Chinese New Year, ending to February, we've noticed a huge decline. So now coming into March right now with this moratorium, with this MCO, what's happening, we have now hit a permanent dead stop already. So in the next few months to come, I would say we're not even talking about recovery. We are actually talking about just survival, pure survival, consolidation of many industries to come. We're seeing retail industries, people, as the matter of fact of today and the next few days, companies are shutting down, right? Even with this moratorium, with the rentals not being paid, many of these companies cannot handle because of payroll and everything. I'm constantly getting reports coming in also. The job market, we're having the highest spike of jobs being lost even as we speak of today. Yes. So in the next few months to come, I think it's everyone's period right now to consolidate the market and start seeing how to survive. So we are going to start seeing people spending less, right? We are going to start seeing economies shrinking. We're going to see a lot of these things coming in to impact the market already very soon.
Yeah, thank you. Thank you, Michael. You are right. It's all about survival right now. Maybe you can share with us a little bit of your experience. How is going to be different from this 2008 credit crisis compared to this pandemic right now?
So I want to share a little bit about this. I'll take some time on this, because there's two things I want to share. First is from my experience. I went out from my company went down in 2008 as well, and I had a failed business during that time, so it's the worst time to come into it. So I was actually I think I was born in the 2008 crisis, where that's where I experienced the most fear. So during that time, let me just share this with you. For those of you who have not experienced an economic crisis or economic crisis before, the first thing that's happening is actually a lot of fear is going to come into the market. So I think everyone has to prepare yourself mentally and not start doing a lot of crazy things. I think too many people are maybe thinking, hey, how to make more money. They're going to put their market in the stock market. They're going to try crazy things. You really have to be very careful because that's going to affect you even worse. So there was a lot of emotional turmoil during the last time of 2008. And a lot of things I want to recommend to people is to make sure you prepare yourself mentally first. Number two is then prepare yourself financially, because it's going to be very different. And in every recession, because I came out of 2008, every recession, it takes a few years. It's not going to take months, right? It's not going to take 1 month or 2 months, and we are okay. This 6 months, we have this moratorium. It's very good already for the government to do this. However, you got to prepare yourself. It's going to be longer than 6 months. For the economy to recover to a stable point, it's going to be 1-2 years. However, saying that, I've got some slides over here which I want to show to you guys, which is really scary. This is not something, this economic crisis is not just for local, or it's not just impacting us. This is the first time I've seen it in many, many years. This crisis, different from 2008, is that this is a global financial crisis, right? So I'm going to show some slides. So this is why this is very different from the rest of the crisis, is because this is basically what we call a global pandemic right now, whereby it's hitting across all economies. You can see all the financial markets right now have taken a hit. This is 24th of March. It's just about 2 days ago only. So most of the things are on a general decline. Hong Kong, Shanghai, we have recoveries in some of the markets, but we're talking about generally everything over here is actually going down, even Japan. So I show some slides over here. We did some research on this, and basically, you know, this is not a recession; it's an ice age, right? A lot of people are assuming that right now that it's going to be in such a way that let's say in the next few months it's going to come up again very sharply, because it dropped down very sharply. But I don't think that's going to be the fact, because let me just, if you look into this right now, this current economic crisis is not because of a economic problem or a financial problem in any of the countries. It is basically a health problem. And this health problem, of course, we started from China, but now it's escalated to everywhere else around the world. But you know, Italy, Iran, Spain, now US, and of course Malaysia. So when I say this right now, and what I mean about this is why I'm saying it's going to be prolonged, is you can see from the map, and this is not updated as well. Look at the whole map, is that the whole world is infected. Okay, got good and bad lah. We are being infected. The world is actually, Mother Earth is actually curing itself lah. So good so however, if you look into this, my perception of this is that it is going to be a long winter, and it's because different countries are taking this challenge differently. Therefore, it will impact each country very differently. And of course, we want to talk about the major countries right now. China is recovering, which is very good news. However, this was taken as of late, and now US has surpassed China as the #1 center for the pandemic itself. Right? This I don't think this is even updated. I will forecast that this will go up to hundreds of thousands soon. You know, and I'm very concerned.
Increasing every day.
Yeah, it is increasing every day. And then if you talk about US being the largest consumer country in the world, when they're having this, they're going to definitely impact many countries, right? As it is right now, they're already doing the QE, and they're already starting to print in and put in money into the market. We can only safely say that this will continue for at least a few more months, if not half a year. So I would say the whole 2020 can be said gone already lah. It's a year. The economy will be definitely a long winter.
Okay, Michael. Now we want you to put the focus back to property industry. How will it impact our property market? I'm sure we are faced with many repercussions. Can you guide us through from that?
Okay, I've got 2 points I want to share right now first, and I think this is very important. I always like to show back and bring back what is happening prior to the virus itself, right? The COVID crisis that we're having right now. A lot of people are now worried about the future, but then I want to show something from the past first, and then I also show what will be my prediction of what's going to be happening for the next few months ahead. There'll be good news and bad news, of course, and then that will then conclude with my prediction, right? So, okay, so this is basically a little bit about what I've done in research of Malaysia, and I've been also looking into it for some time. As a property investor, of course, I want to make sure that I'm well ahead with all the information. We have to really do a check first. That's prelude is the troubles before the fall. Actually, our market was already not doing too well. We're already experiencing an oversupply in our market. I was actually very worried about this, and actually my honest truth is this: I actually thought 2020 will be a recovery year. You know, we've been having oversupply for maybe 3-4 years already. So I thought, it's old news. It's not something that, if those of you not in the property market, then it should be new news for you. But for us in the market, we've seen this. It's not every year. You know, you see, 2015 was not so bad. 2016, 17, 18, it started to go up. But you see, in 2019, it started to go down a little bit. So I was thinking, wow, okay, it's good for the market to recover. By the way, this is still considered an oversupply. It's still very bad. The normal times are usually like in 2015, as you can see, it's like 10,000 units oversupply. It's quite normal. But we built up throughout the years, right? In 16, 17, 18, and 19, it started to go up to 31 units oversupply, which is 3 times of the normal market. So, but the good news is you can see there was a decline. So I said, wow, happy, 2020. Okay, as an investor, I can see recovery got a bit of light out of the gray clouds. Okay, and I'm going to break it down to states as well. So these are the states which are at the most exposure. Okay, and as you can see, Johor and Perak is now as of last year, which is very high. They are at 17% oversupply. They're one of the highest in the states. Selangor, and look at KL. Actually, I want to point out that KL, prior to the virus itself, had a lot of opportunities because it was the 6th oversupply, which is very good for a big state. To be so low in oversupply means it's very well managed. So I think it was a very good time for us to come in already. So these are all the figures I actually compiled in, and and to share with you that we are in a situation which is not so healthy at the moment prior to the virus. But I was expecting a recovery this year. A lot of people are saying that already. We are stabilizing. The government's doing a good job. So we are actually going to get to a point where we stabilize. Right? Then, however, of course, things happen. Okay. So that was prior to the virus. However, when the virus hit that time, I think it started to escalate a lot of things. How do we stop an oversupply? Is when the economy is healthy, when people are positive and they continue to buy at a normal pace because everyone is a home, and therefore our market will start to stabilize. So we are heading towards that direction. Government is doing a lot of responsible points to start to push out affordable housing and many of these schemes. So we had all the financial points in view. However, at this current point, with this current crisis happening, we are going to start seeing a lot of more slowdown. In a normal market also, what happens is people stop buying already. So in an oversupply market, people even stop buying, will add on to the balance stocks that we're having. So in the next few months, to say, I will definitely foresee that there will be opportunity in the market, and most of it will be looking into auction. I would say that would be my first area. All right. So
yeah, good sharing, Michael. What do you think of I just throw some scenarios to you. First will be, okay, since now we are having this installment holidays for the next 6 months, what if some of the tenants come up, and say, okay, I want some discounts on the rental. I don't think I can afford this rental. I want to opt out from this tenancy. All this kind of situation. How us as an investor should deal with it?
I think there's always 2 points of it. And I would say that the first thing a landlord should do responsibly is that since we are actually on a installment holiday, we should consider proactively reducing the rentals of the tenants first. I think this is the first thing everyone should do, because 2 things. Number one, of course, is on a humanitarian point, is of course we have to help our tenants out. If we are getting a rental installment holiday, we should at least cut it down and give them a significant discount. So this is the first thing. But the second thing why I ask people to do that is then you get in touch with your tenants, then you understand, and you also will be proactive to know which is having problems in their lives. If some of them are having job losses, if some of them are having some situations or their own personal crisis, you will be then at least at the forefront to have preventive measures. Perhaps you can help them to relocate them to somewhere else, which is cheaper and more affordable for them. Okay, or perhaps you can start to do some holiday rentals to help them a bit, which is more appreciative. Rather than at the point right now, which I also have a lot of landlords coming to me saying, hey, tenants suddenly stop paying and they cannot contact them. So this is the point whereby, we are in a lockdown, we can't go to the house, we can't go to them.
You can't be knocking their door.
It's a phone call. So communication is very important. So the point of panic is when your tenant don't talk to you already, don't pay you already, it's already too late. you can't go and see them already, right? So at that point, I think it's quite a critical situation. And of course, the first thing I always tell landlords to do is re-establish communication. Always talk to your landlord tenant again to see what you can do with them and what is their issues, and understand them first before taking drastic measures. Because I think the obvious thing everyone can do is just go towards letters of demands and stuff like that, depending on what kind of tenants you have, and go the legal way, which is very sticky. I think in any country, the law always protects the tenant more than the landlord, and it's going to be very hard for us to then recover the losses. So the first I always tell people to do is proactive. Always go out there, connect with your tenants immediately, right?
Understand. So Michael, what do you think of this 6 months moratorium? Because in the market, there are two different sides of opinion. First, you say, no big deals, I'm still paying the compounded interest. The other side of it will say, okay, we are very appreciative, you help us out. At least for these 6 months, I can ease some problems in terms of my cash flow, things like that. What's your take on that?
I think it's a very hot topic right now. The moratorium is like, people are thinking about it. And I want to give my personal opinion. Regardless of, I'm not in favor of how the current government got into power, but I have to say they have done a lot of very good job. I think seriously, let's talk facts to facts right now. We're not political today. So they have done a very good job. I think this is not something that the banks themselves imposed. This is from Bank Negara. And the government is, of course, pushing for this. It's a very good effort. I really feel this will really help the economy a lot. Because in a situation like this, we all know that credit facilities and loan, we all know that installments are a major factor that pushes the economy forward. So if we put all this on hold, and I'm not talking just about property, we're talking about car loans also, everything put on hold really does help a lot of businesses out there. And I hope that people understand and appreciate this. The thing I have to tell people right now, and why I didn't get involved with people asking me to go Facebook and stuff like that, I don't want to be in a debate. I honestly am pro with the moratorium. I think it's something good everyone should appreciate. But I get all these voices. I don't dare say this because a lot of people start complaining, hey, compounded interest, this, that. Guys, stop talking about the 1 cent, 2 cent that you lost. Look at the big picture. Billions that we are saving in the country, which will help us in long term. And then the second thing, I have people in the banking industry. I tell you, I kudos to the bank, man. I really salute the banks. Think about it this way: they are not making money, and they are still operating until today. They're obligated to open their doors. The staff are going in. They are now frantically trying to pay their payroll as well. Banks are also businesses. So I really think the banks and the government is doing a great job right now, giving us this 6 months holiday, and we should appreciate it and not count the cents and the dollars that we are losing on the interest or anything else, right? Just move on and then do our part. To give to our tenants, and maybe if you have excess money, help other people. I think that's my say for the moratorium. It's really good.
Yeah. Hey, Michael, what do you think of overall Airbnb?
Okay. The industries that I think that are really badly affected, and I have friends in it, and I also have partners in it, and I think that it's something very tough right now. Airbnb is related to tourism, is related to hospitality, is impacted by travel, and it's currently, I have to honestly say this, with no due respect, it's a dead zone. It's really a dead zone. Anybody who's in Airbnb right now, you really have to think of an alternative. AirAsia just came out with an announcement yesterday that they're hibernating their entire fleet, right? Entire fleet. That's how bad it is. With no travel coming in, with no tourists coming in, Airbnb is the hardest hit market right now for many investors. My strong suggestion to you is to convert your business into long stay. After all, it's a fully furnished area. It's easy for you to now take a cut. Take a cut if you can, and then give it out for long-term stay. Right? Convert your business already. Airbnb, I think, will be hit for a long time. I think 3 to 6 months minimum. Do understand that what I'm seeing right now, I talk to a lot of Airbnb friends, and is that even though we come out of lockdown in 21 days, right? Other countries are going to prohibit traveling. Right? They're going to ban traveling from different countries and then some other countries are going to go into lockdown. So you're going to have multiple effects. So Airbnb is exposed to regional, if not international, rather than just Malaysia. So convert your business. Stop thinking about other people coming in. Don't even talk about local tourism. You can do that. But what you want to do is convert it into a more sustainable long-term model. That's my suggestion.
Okay, so from short term, thinking into probably 3 months, 6 months, or 1 year kind of
Yes.
tendency.
Yes. I think that will be a more sustainable model.
Okay. Michael, in your opinion, what other initiatives should government help to or take to stimulate our economy at this point of time?
I think right now it's exciting because today the government is definitely going to come out with more stimulus packages. I think I'll break it down into short term, medium term, and long term. The short term ones, definitely they're going to give out more aids to the businesses out there in the private sector. I think they should focus on that a lot. Many affecting right now. I feel that they have done quite a fair bit already, but they still need to focus mostly on hospitality and tourism to try to sustain that business a bit. If not, then there's going to be a big fall in terms of the economy. So I think right now government is definitely focusing more on immediate stimulus to make sure companies are staying afloat, so that it doesn't increase the unemployment rates. Okay, but there's medium term and also on long term, which I'm more excited. I would suspect that the government, being fiscal policy and also monetary policy, Bank of Negara may also lower down their interest rates, the OPRs, after the 6 months, which then would start to boost the economy. So, and also another thing I'm looking into is maybe taxes. There's a question mark over here. There is a potential for things like they're going to cut down on taxes and lower down on taxes, which will give a lot of stimulus. I think that would be where the government would be coming from right now to help out a lot of people. And I think that should be done. That should be done.
All right. So, Michael, this is a little bit personal. What will be your property investment strategy at this current time?
Wow. Okay. I always tell people this right now is that in current times, I feel everyone should shift, and they should. I think the only thing constant in a crisis like this is change. And I'm not talking about monthly changes. I'm not talking about weekly changes. I'm even talking about daily changes. I think for every investor out there, I'm reaching out to as many investors as possible, is to change your mindset. Don't look into this as something that you constantly have to go into. So my strategy right now is this. For me, in terms of property investment, I'm going to put it on a hold. It's a holding pattern because the property market will always go 3 to 6 months after the stock market or money markets, right? The common sense is this. Jobs will be affected today. Companies will be affected today. And then after jobs will be affected later, pay cuts followed by maybe unemployment rates going up. So this will take a long time, maybe 3 to 6 months. So you have to see the reaction of the market within that time. So I ask all property investors to buckle up, hustle down. I think 2 points over here for me. I'm reviewing all my assets. I'm reviewing all my current facilities and making sure that I'm stable. I think every investor needs to do that. All right, stabilize yourself as much as you can. All right, and then after the lock-in period, you may want to consider doing some changes in your portfolio immediately. That is one thing I can do, because in these 6 months, although it's a moratorium holiday, it doesn't mean that you cannot do anything with your properties. So those are rented out, go and get it rented out, renovate it out, quickly get it done. I think rental is the most key at the moment.
Right? Is refinancing a good strategy at this point of time?
Actually, now I'm calling the banks, and I feel that at this point, I can't get any definite answer for you. A lot of people ask me, hey, Mike, can I buy now? Mike, can I refinance now? Can I sell my property now? I'm still getting data from the bank to see how loans would be impacted within the next 3 to 4 months. So I really can't answer that. Right. I would feel that, yes, if you can, but it all depends on the banking facilities. All right. So I can't answer that at the moment. I'm also anxious to find out. Yeah. Maybe I'll update you later.
Yeah. Hey, Michael, on your company's perspective, how does this COVID-19 impacting your business? And what kind of changes or measurements that you have undertaken to address this or mitigate this impact?
Wow, this is a big thing. I have businesses in several areas. Of course, right now we're at education and events. And like what we're doing right now, this is the wave of the future. The thing I maybe regret, I should have bought the stock for Zoom.
Me too. Wasted.
Yeah, so it's definitely going to be online. I think right now a lot of our businesses are going online to reach out to people. It's affected our business as well. I have businesses in Hong Kong prior to this, right? I still have it, and thank God they're doing quite okay now. So I can tell, maybe I can give some, my own experience on how it's affecting my business, and hopefully it will change for many of you as. Hopefully it can help you in your business as well. Like in Hong Kong side, what has happened in the past few months is that there's a huge reduction of traffic flow. So footprints for many of the businesses will fall for traffic. So you have to consider that as a contingency. Hong Kong has opened up right now. They've never really gone into a lockdown, but there's a lot of curfews being restrictions being put. So in our business, even after the lockdown, I think that we'll have to be very, very considerate in actually running events, right? Anybody who wants to run major events, everything like that, you have to have limited people in the room, right? So these things are all going to be changing very soon already. My business in Hong Kong, where we run events over there as well, we used to have 60, 80, 100 people in a room. Now we restrict it down to only 20 people in a very big room, okay? We write down disclaimers, making sure that everyone is, and we take temperatures and make sure everyone is okay. So in terms of the event business, it's definitely going to go down, right? In terms of many of this. So my business is also going to be affected like that. But this is what we have to do to make sure we handle the, we survive, but also make sure we are taking care of the healthcare of our team and also our customers. Online is definitely going to be something going on. However, there's a second part of my business which is doing pretty okay, which is property management.
Oh, surprisingly.
Property management is very stable. So surprisingly, there are always silver linings on the crowd. So my property management doing okay. Of course, everyone needs a place to stay. So we make sure we manage for them. We have certain sublet businesses. My students have certain sublet businesses. We take proactive measures, make sure got temperature check lah. We make sure the sanitization lah, mask lah. So we provide all that, but people are happy and they are actually staying. So property management seems to be doing okay.
Wow, amazing. Good for you, Michael. Okay, the last question. What strategy should investors adopt at these critical and trying times?
For all the investors out there, I would say that for the retail investors, the first thing you'll do is change your strategy. I think property will lag, right? So within this period of time, consolidate yourself. Make sure your credit worthiness is still there. When the time comes, you really need to buy. I would say this from 2008 and even in 1998. In every single crisis, there's opportunity. And it's all about timing. So if I were to say in the next 3 to 6 months, there'll be a huge opportunity in the market, you must be ready today, because when the market comes, when the opportunity comes, you must be able to take that property. And property, most of the time, you use it with leverage. You need to get a loan. So the strategy I say right now is prepare yourself. When the market is ready in about 3 to 6 months' time, there'll be huge opportunity there. Number one, I would say that the first opportunity is in the auction market. All right, many businesses may not be able to even withstand themselves, even with the moratorium, right? They have to pay payroll and everything. So they may downgrade, they may get rental reductions. Landlords may not be able to sustain. Therefore, the properties may go into auction, but not so soon. So this
will probably surfacing after the 6 months moratorium, is it?
Yeah, it will be probably surfacing within the time. So keep a lookout for it. Okay, that's one of the things I would say. Then followed by also developer and new markets. I think right now that is one of the areas. A lot of people say I've been not pro with developer. It's not true. It's just timing. Okay. I mean, I'm coming from an investment point of view, and I think right now is the best time for us to go into new markets and explore that markets. I seen it in 2008. Property triple the price. I've seen it during that time. I know in 1998 recovery from that, property also went up quite good. So I would say that will be my strategy, adopting it moving forward. A lot of opportunities in the market.
I think most of the industry stakeholders, including developers, they are undertaking a more realistic and pragmatic approach, whereby gone were the days where maximizing our profits. Now is basically just to sell the properties. So now I think we can still see some good deals popping up.
I would say so. I think that it's time also to help the developers in a way. I think it's also for us to support ourselves. But I always want to say this: for a lot of investors, make sure you got you are stable yourself first. Don't push out the last bullets today. Correct or not? It's crazy. Then you also cannot sustain. You go into auction, so don't do that. So make sure you stabilize yourself, and then at the same time, then you look for opportunities. Have some savings, bullets ready. So when the time comes, you do it slowly, lah. Right? Like I said, a recovery always takes 2 to 3 years. There's no hurry for you to do it all within a week, right? So I would say prudence, balance, and also getting yourself prepared. It's really the best way to go and do it right now.
Thank you very much, Michael, for your precious time. We really get a lot of insights, and thank you for your selfless sharing with all our followers tonight. So wishing you all the best, and also wishing everyone out there, hope you can, take some diamonds out from these sharings and really implement and execute the plans. Thank you very much. And
yes. Want to wish everyone here stay healthy. That's most important. Cherish this time with your family, and loved ones. Don't get too fat.
Work out.
Yeah, and I want to thank Dato as well for inviting me on this, and I hope that you guys really go out there and really thrive in the times of crisis.
Okay, all right. Let's stay strong together. All right.
Yeah.
Thank you. Okay, bye bye.